Wonderful good day, ladies and gentlemen. It's day 2, PDAC 2017, and we are in the morning here now at Marlin Gold. And yeah, we want to talk with Akiba Leisman, who is the executive chairman of the company. Good morning.
Hi, good morning.
Marlin Gold, what's the company about? What are you doing?
So Marlin Gold is a unique gold mining company. So in addition to being executive chairman and interim CEO, I also work for the controlling shareholder, a $3.5 billion private equity fund
Wow.
at the United States of America that owns 85% of the outstanding stock. So Marlin has been going through for the last 5 years since Wexford took control of this company back in 2012, and we've permitted, developed, and now commercialized a very high-grade open pit mine in Mexico that has produced in excess of 30,000 ounces of gold over the course of the last 4 months at less than $300 an ounce all in.
Okay, but what might be the annual production then?
About this year will be at about 55,000 ounces of gold. So we're no longer going to be producing at 10,000 ounces a month. We're going to be down throttling to something like between 4,000 and 5,000 ounces a month at about $700 to $750 all in costs.
Okay, because you said the first 30,000 you produced at around 300. That's phenomenal.
That's right. So since September we entered into a high-grade part of our mine.
Yeah.
We were producing in excess of 5 grams of gold for an open pit heap leach mine. So to our knowledge, this was one of the highest grade open pit heap leach mines globally. And then for the foreseeable future, we're starting to blend some intermediate and lower grade parts of the deposit. So we're going to be processing somewhere between 1.5 to 2 grams for the deposit really until the end of its mine life.
Still making a nice amount of money.
Still making a very nice amount of money.
Super, fantastic. And what are the other parts of your business? I mean, that's the producing part, that's spitting out the cash. That helps a lot, of course. But what else you are doing?
So during the downturn, really at the trough of the market, we were able to acquire a project in the United States of America in Arizona that contained about 1 million ounces of gold equivalent resource in eastern Arizona.
Oh, nice.
Okay, so we've been in the process for the last 1.5 years of consolidating all of that land. So one of the other unique things is that we are a junior mining company that's in control of a 1 million ounce resource in the United States of America, where all the surface and mineral rights are controlled by us.
That's very important. So you have really all the rights in place and all the permits and
So from a jurisdiction perspective, from a permitting perspective, from the ability to explore it efficiently perspective, it's a godsend for us to have acquired all that land in the last 1.5 years. And on top of that, in the last month, we do think we made what is going to be a significant discovery on this project. So that gives us better understanding as to what the resource is. And we're starting more district scale exploration, doing some geochemistry work, geophysics work, and hopefully this 1 million ounce deposit is going to grow substantially from there.
And so that means the drills are already turning, right? So we can expect news.
So we started with 1 drill, we made a discovery, then we went to 2 drills, we made a discovery, and now we're at 3. And if we keep making and getting good hits, the budget is here, whether it's going to be through Marlin's cash flow in Mexico or through the support of the controlling shareholder.
And it would be exactly my next question, because drills turning means you are burning money first. Yeah, we hope you find more, that's for sure. But can Marlin pay all the expenses through the gold production?
Yeah, the beauty of our operation in Mexico is for the last 4 months, we have made in excess of $30 million that went straight to the balance sheet, in part to pay for our exploration programs, both in Arizona as well as elsewhere in our property in Mexico. We've also repaid $5.5 million US of debt to the controlling shareholder.
What is that remaining?
So there's now $32 million of principal. That's down from $37.5 million, all on an unsecured basis to Wexford Capital, the same controlling shareholder that owns 85% of the public equity.
Okay, super. Any other debt? That's the whole amount, 32 million?
No other debt at the company.
Okay, super. What is cash in the company by now?
So we have about $8 million Canadian in cash and bullion right on the balance sheet. And we're generating about, call it 4 to 5 million Canadian dollars per month of free cash flow.
Super. And that's also enough to cover the whole thing? That means you mustn't go back to the markets and raise money?
That's right.
Because that's important.
Through our operating assets, we are not only self-sufficient at the operating level, but we're also able to finance all of our strategic objectives, doing the exploration work in Arizona, doing the exploration in Mexico, as well as financing our royalty vehicle, Sailfish Royalty Corp.
That's also interesting. What's a royalty vehicle about? Because I love royalties.
Exactly. So Marlin owns 100% of Sailfish Royalty, and we have an interesting deal with another publicly traded company called Golden Rain Resources. They're developing, in concert with us, a very high-grade deposit in northern Nicaragua. Initially, it's going to be 8 grams a ton in open pit. So to our knowledge, one of the highest-grade open pit initially projects in the Americas. And currently, they have about 1 million ounces of resource. And the deal that we struck with them is that Marlin became became a 20% shareholder of Golden Rain. We still own roughly 19% of the shares in Golden Rain. And then our royalty subsidiary, Sailfish, has a 40% gold stream, 40% gold stream at $700 an ounce until they repay us back about $19.6 million, and then it's 20% of production at $700 an ounce thereafter.
And when will the production start?
So we're anticipating that project getting permits sometime in, let's call it the next quarter or two.
Oh, wow.
And then there will be about an 8 or 9 month construction schedule, which is going to be in part managed by an engineering, procurement, and construction management firm that we have an exclusive relationship with, Sonoran Resources.
Wow,
so
fantastic.
our operating team will be inserted into their project to help build, help commercialize, help make things more efficient. And then by mid-2018, we'll be getting cash flows from that royalty that will average somewhere in the neighborhood of about 8 to 9 million Canadian dollars per year.
Wow, that's fantastic. So that means that comes in addition to your production. Let's come back to the production you have already. Do you want, let's say, now you're cutting back a little bit, but do you want to raise that in the longer term, and where do you see the mine life?
So right now, we've delineated a mine life at our Mexican operations of about 2.5 years, and that's what we would consider an internal reserve. So not a public reserve, but an internal reserve. Now we're starting to see some good indications through our exploration program that that can actually be expanded materially. So right now, our current mine is situated on 700 hectares of land within a property, a 60,000 hectare piece of property that we are in full control of. All of which, and in some areas within a structural corridor, contains very good showings of gold. So on top of the 2.5 years, we have the ability to potentially expand our current mine, but also elsewhere on the property, we think we have the ability to make new substantial material discoveries within our Mexican operations.
Yeah, so that means you can go for the next 5, 10 years, hopefully even longer.
It's all going to be determined by the drill bit, but certainly we hope so.
Let's put it that way, the potential is there.
Exactly. That's exactly right.
Great. What do you want to do then with Arizona? I mean, exploration is on the one hand, that's great. You have the 1 million ounces, you have all the, let's say, the rights, that's super. It helps a lot. But do you see that also, that it goes into production, or do you want to joint venture that, or what are your plans?
Right, so the beauty of our company is that we have the operating team to put assets like this into production.
Exactly.
But we are also backed by an investor. So really the primary thing and the primary objective on any of the assets that we control is what makes our shareholders the most money. Both from Wexford as well as for the minority shareholder over at Marlin. So if it makes sense to joint venture, we'll joint venture. If it makes sense to sell, we'll sell.
Okay.
If it makes sense to build, we'll build.
Okay, so all options are open.
Exactly.
Great, perfect. Maybe last question, let's say on your first thing on your balance sheet and also then on your corporate structure. As you said, over 80% of the stock is in the hands of Wexford.
Correct.
So that means that limits a little bit the liquidity in the stock, I would say. Any plans to increase the liquidity? Maybe Wexford wants to give up some shares, I don't know. But I think this, yeah, for future shareholders may be important.
So we aren't investors, so it's not really as a joke, but in the long run we aim to own 0% of Marlin, right?
Okay.
So this is an investment we like to buy low and sell high. The reason why Wexford owns 85% is because we went through a very substantive and material bear market over the course of the last 4 years, and there really wasn't outside capital for a company like Marlin. So Wexford was there to help finance the company, to get our mine up and running and de-risk it and eventually get it commercialized and profitable in Mexico, to acquire our Mexican asset, to advance our royalty business. But in the long run, 85% is not a healthy ownership for a publicly traded company. And sure, whatever is good for the company we'll do. If that means doing a secondary offering of Wexford shares at prices that we like, absolutely, that's on the table.
Okay, great. And very last question now, really. How does the debt structure look like?
So right now, at its peak about a month ago, it was $37.5 million of 8% unsecured debt to Wexford. So the only debt at the company is to Wexford. We repaid $5.5 million of that about 4 weeks ago.
Yeah.
And the company, even after spending money on exploration in Arizona and Mexico and funding our royalty obligations, we do have excess cash, which almost entirely will be used to repay debt.
Okay, but is it more like a credit line, or does it has a fixed maturity?
There is a fixed maturity on it of January next year. Wexford has pushed the maturity back twice. It has actually lowered the interest rate once as well to the 8% that it is right now. Yeah. And if it comes to the time to change the maturity date again, we will. Wexford, at the end of the day, is a friendly shareholder.
Good, that's the important thing. Great. Then thank you very much for that. All the best, and we look forward to some nice updates then this year. Okay. And good drill results, of course.
Okay, great.
Great, thank you. Yeah, ladies and gentlemen, there was Akiba Leisman, the executive chairman of Marlin Gold, and you heard it. It's a quite unique model, I must say, because you have a production gold mine, you have exploration ground, and you have a royalty business in addition. Never seen that before, all three in one company. And yeah, I think very interesting. Check it out. Thanks for watching us. Bye-bye from PDAC Toronto 2017.